All right, good evening and welcome back to another session of live analysis. This is your host Harsh, and on behalf of GTCFX, once again a warm welcome and thank you for tuning in. Thank you for taking time out to join. So we've got those many joining in YouTube as well. So once again a warm welcome to all of you who are joining from our YouTube live. This session will go on for at least 30 to 40 minutes, and these are normally conducted every Friday, the live analysis in English. We had to reschedule for this week, so it is on Monday, but we'll again be conducting on Friday as per schedule as well. So let's get started. We have five potential high potential trade setups to be discussed in this session. So it's going to be quite busy today. We'll start with Euro USD and follow up with the dollar index, one of the most traded instrument and favorite of most of them, gold, GBP USD, Bitcoin. That is five high potential trade setup, and we will also touch base with the volatility index in this session uh, to see what the stock markets are up to. Thank you, my friend Irazov. If you don't mind, I will mute or request you to mute just in case, if required, you can unmute and let me know. So let's get started off with the risk disclaimer. I'll read out the risk disclaimer first and then we'll get on the charts. OTC or margin derivative contracts, including difference and spot foreign exchange, are complex instruments, come with high risk of losing money rapidly due to the leverage it's offering. You should consider whether you understand how these products work and whether you can afford to take that high risk of losing all money. Independent advice is highly recommended, and this session will serve as an educational purpose and will not include whatsoever any kind of financial recommendation or advice. Thank you. Okay, we are going to discuss five high potential trade setups now. Let me flip the charts to the Euro USD daily. Kindly confirm if you are able to see the screen so that we can get started, please. Yes. Okay, we've got a confirmation. Yes, thank you, Mr. Ishwar. Thank you, my friend Romal. Romal, I think you're coming in for the tuning in for the first time. Thank you for joining, I suppose. Uh, we conduct these live sessions in English every Friday. Yeah, every Friday, 4 p.m. Dubai time. You want to mark this date. And I'm also going to send you all the links for other webinars as well. Kindly stay tuned. We will be giving all the links of the recording as well, so that you can catch up. All right, let's get started off with the Euro USD. We've got five traded instruments to be analyzed in this session. If you do have any questions, technical whatsoever, while I'm marking up the waves, please feel free and type in. For those who are joining us through YouTube Live, may also type in if you have any questions or doubt. If I'm not able to take during the session, 100% will send across the message through the chat after the session is done. For those who are joining in now, please stay tuned. We are just starting off with the first instrument of the day, Euro USD daily chart up on your screens. So the larger degree trend as plotted here is up, five waves up. As indicated, the larger degree trend has was up since July 23. It has taken 2 good years to confirm a complex corrective structure. For simplicity, I have plotted ABC here. It's actually a combination WXY possibly, and not only five up followed by three down, but that wave has actually bounced from the 61.8% Fibonacci ratio, all right, which is a super powerful combination, five up followed by three down. So wave one of one larger degree and wave two of the similar degree, wave two terminating right at the Fibonacci 61.8%. 13th of January was the date when it bottomed out at 1.07, 1.0177. We started around those times, and 17th of Jan was our first call. We've been taking short-term profits since then, and we've got to bring up one more today. All right, I'm straight away coming back to where the action lies. Welcome, Muhammad ji. Welcome, Mr. Taha. And welcome once again to all of the viewers who are joining us through the YouTube live link. Please feel free to type any questions that you may have during the sessions. If I may not be able to take the YouTube questions, I will get back through the chat session after the work is done. Okay, I'm going to quickly label the first impulse on the hourly chart here. It's of a minute degree, but the one thing that is more or less confirmed is five waves up and three waves down. That particular structure is being replicated not only on the daily but also on the hourly. And if you watch the 15 minutes time frame, you would be seeing the same thing happening. So it's the fractal nature on full display in the Euro USD. Okay, give me 2 minutes, please. We are going to find out a trade here. The Fibonacci 78% was hit on on the 3rd of February, just after the uh, trade wars, the tariff wars began, and the gap down. That was a trading opportunity for us actually. Those noises when they come out on the market, it's actually a trading opportunity for people like us. So we've got five up followed by three down. It's not only that, but a series of waves, ones and twos are on display. So we've got wave one, wave two, and again, possibly we've got wave one and wave two. It could be possible wave three in the making. All right. Now, last time when we were here, we had projected an entry or proposed an entry around the same price, around close to 300. And the target was projected around 500 or 700, 750, if I remember. Okay. Now 500 has been met. We are just about a couple of hundred points away. Let's project the larger degree targets first of the primary wave, and then we'll come back to the shorter degree targets as well, short-term targets as well. We don't have many participants right now because most of them have been on the impression of the Friday session, which had to be rescheduled. So not a problem at all. We've got some viewers on the YouTube, and we've got here as well. Okay, so the target for Euro USD remains unchanged around the 750 mark, and it also rallies through 1.11. The potential targets for Euro USD are as follows, and before we come to the actual trade, I would like to just brief you of what could be the next step for Euro bulls. Bulls are completely in control. That is for sure with a 90% probability. A potential risk goes to 1.0200 and reward is around 1.0750. All right. Now, the only thing which I see that could happen according to the wave structure here, because we are looking for a second wave. All right. See, that is wave one. Let me explain what we are looking for now. We've got wave one of a larger degree here. All right. And we're looking for wave two of a similar degree. And we've got to see 3, 4, and 5 higher. So if you allow me to change the degree quickly, it's a minute degree that we have got on our hands. Maybe we've got a minute wave 1 and we're looking for a minute wave 2 here. It might take a while actually. Minute wave 2 is either in place right there, okay, around 1.02, or minute wave 2 is going to take some sideways action, because I like to see the sideways action before the second wave actually terminates. This is what I can show you historically as well, what happened uh, in the past history. So with experience and with the wave structure, which is nicely building up right now, there might be a slight push through the 500 handle, or maybe 530 or 580, all right? Potential remains for 580 in the near term, but then there could be a sharp decline back towards the 320, 340 zone, all right? And that is where we kind of recommend traders to grab that opportunity, because that would be the wave two of one higher degree. If you look at the structure several years back, and price action theory always suggests that history repeats and keeps on repeating over and over again. Now that was a running flat wave two. See that? That's what we are expecting, or that's possibly in the making even now. So here's the first trade of the session, potential trade setup in the Euro USD. Those who are joining in late or just joined, please don't worry. We are just doing the first instrument for the day. We still have 4 to go. And of course, if you have any other instruments you want me to analyze, please feel free to type in potential. I think we'll make it a bit larger. Potential longs in Euro USD can be partially, if you don't want to miss on the trades, partial right now 1.0481. It's partial, and remaining around 1.03 will give a range actually of at least 50 points. So it will be 10 to 560 something. The reason why we are saying, I mean, most of the traders would not say this actually, but they would actually commit completely on the long side. But the reason why we are saying is there are two of them actually. One is the RSI, which is kind of overbought right now. And before the second wave of a larger degree terminates, it would want to form a sideways pattern like an expanded flat or a running flat. Stop would not go anything higher than 200, and target. Now this is a now we have faced a. I don't know if Tulwalop is here, but one of our participants had a problem about the short term and the long term. Okay, we've seen Sanjay. Sanjay, no, Tulwalop, my friend, is not here. He must have missed it. So the question was about the short term and the medium term targets. So I'm going to bring them up both right now. The short term targets. Oh, The short-term target for euro up on your screens now. They are extremely short-term. So maybe if you're pointing out towards an intraday setup or uh, maybe for 24 hours to 48 hours, then you might want to target 1.05 80 90 zone. All right. But actual targets that we're looking to hit is 0750. And looking the risk reward ratio, I think it is better to position ideally for a bit longer term. We are expecting these targets to hit around the 4 to 12 weeks mark from now. Uh, but see, these waves are telling us a beautiful story right now. I mean, a slight push on the north side above that particular high. All right, it goes towards 580, and it completes this particular wave. This particular wave. The target for this particular wave is 580. The reason why we are bringing up a short-term and medium-term target is one of the query which was raised by one of our friends, Alop. He's not present here today, but he's a regular. And welcome all of you who have joined us now. We are just doing the first instruments, Euro USD. We still have four to go, at least for this session. So that's the first target, 87 or so in the near term. And after that, we should be seeing five-wave decline or a three-wave decline. That would serve the minute wave 2 structure nicely around the 310, 350 zone. And that price action would be the thrust level for bulls to raise up to 750 in the next coming weeks or so. All right, so that's the story. In the Euro USD, we've taken about 7 minutes. Normally, it's about 5 minutes average. So let's pick up the dollar index, followed by gold, GBP USD, Bitcoin, and VIX. We really like to bring up the daily chart first, and that's what I'm doing. We need a clean chart, so let's have a cleaner one. All right, and the story in the dollar index is as follows. We like calling these as stories because charts are always telling us beautiful stories. We just need to pick them up. Okay, we've got wave 1, 2, 3, neat little triangle wave 4, and thrust wave 5. I'm quickly changing the degree to minor. That is on the minor side, we've got the larger degree trend lower. Not only that, we've got a neat little ABC corrective rally, which has taken 2 years to materialize, raising the bar towards 110, and that was the turning point. And indeed, we were glad that we were able to catch it around the 13th or 17th of 13th January. And since then, we've been short and sell on rallies potentially. So dollar index is potentially as a beautiful case of sell on rallies. We repeat, sir, there is no recommendation. These are not our recommendation. This is what the charts are telling us. And the only skill that God has given us is to identify what the charts are telling. It's 5 down followed by 3 up, nicely poised right around the 61.8% Fibonacci retracement, just about that push through. And and then what we've seen right now is a series of waves ones and twos being carved, or a potential combination being carved out, which I'm bringing up on a 4-hour time frame. Quickly, I'm going to plot the chart labels. Let's do it on an hourly so that we can see the waves clear. Here are the waves. If you do have any questions, feel free to type it, sir. I will take them after the analysis is done, whenever possible. For those who are joining live in YouTube, thank you once again for tuning. All your questions would be taken definitely after the session is done if I'm not able to do it right now. I need to flip screens actually, but it's okay. I've been used to it now. All right, so we've got 5 down, followed by 3 up of minute a degree. All right, and I'm also seeing many viewers coming in or tuning in for the first time. Thank you again. Just to remind you, these live sessions are done every Friday in English and every Tuesday in Hindi. Once you register, you're registered for all 50 sessions right through 26th of December 25. All right, sir. So what we're seeing right now is a wave 1 of minute followed by wave 2 of a minute degree at 109.51. So potential trade is on the short side, keep selling on rallies, but this could not be the exact price where you want to build your equity completely. You can build your equity partially, and the reason why we are saying partially is because the pressure, of course, remains on the south side, but it could be on a temporary basis. We are looking for a projected target in the near term towards 105 or 106 and 105.50 around. There is a slide. This wave is a corrective wave, okay? And that is a lower degree wave 4, which I can see on the charts right now. We've got lower degree wave 1. I won't plot, but I can run you through the wave here. That's a beautiful lower degree wave 4. And immediately from here, in the near term, we are looking towards 106 and 105.50. All right. So the trading point of view, here's the setup on your charts, potential trade setup for the dollar index. And I'm going to explain what could be happening and why we are recommending potential partial trade setup and not completely. Potential shorts partial at current price 106.38. Remaining, I would suggest wait for a pullback towards 108.10, 108.50, please. And I'm explaining why we are waiting for that just in a moment. I'm running you through the wave potential wave that the instrument can be taking or should be taking rather. It should be the stop loss should go above 109.50. Now there is a slight suggestion. If you're trading dollar index or if you're wanting to trade dollar index, please look into your provider because many providers have different highs and lows. There is a price difference. So kindly stay above the high. Sometimes you will see 109.85 as a high with a provider called 8cap. This is capital.com. It is providing a high at 109.60. So on a safer side, we would recommend 110.30. That's the highest of all the providers, okay? And the target price is potentially 105 or 106 short term, 105. It's actually going towards 102. You'll be surprised, but it's actually going below. We are going to see possibly we are going to see two figures. The price is in three figures right now. We are possibly going to see two figures in the next several weeks to come. So dollar index is potentially in a larger degree weakness for the next several weeks to come. Now, the reason we are saying the charts are actually saying that don't push all the trades right now, or don't go completely short right now, is because of this. It's possibly wanting to carve 333 pattern, and it's if it's carving a 333 pattern, it's going to give us yet another opportunity, possibly towards 10850 before the next larger degree move lower. But tell you what, sir, the charts are clearly indicating a story that dollar index is an excellent case to sell on rallies. The next up is much awaited gold. I'm going to start on the daily chart as usual. The story remains unchanged from what we've been discussing since the 17th of January. High potential trade setup and the alternate count, they are not changing at all. Please give me a moment. The larger degree trend is certainly up towards the 3200 mark, which we have been showing since 17th of Jan. There is no change. The larger degree trend is certainly up, and the potential target for the fifth wave are as follows. So when we are saying that most of the fundamentals and the central bankers are bullish on gold, it is also showing up on the charts. There is no ambiguity that gold is possibly moving towards 3160. The only question that we have been again and again and over again bringing up is that whether it's going it from here or it's wanting to complete wave 4, which we are still considering a high potential drop towards the 2500 mark, and after that wave 5 could resume. And the reasons why we are doing it again, I'll take 2 minutes to explain. Wave 2 was sharp, a zigzag, and the theory of alternation, or the guideline of alternation, suggests if wave 2 is sharp, wave 4 would take sideways or an expanded flat or a triangle. All right. Now we've got only one pattern left, which is an expanded flat for wave 4. Triangle is ruled out. Any other pattern is ruled out. So one is the expanded flat theory, which we are expecting for wave 4, and that brings us lower. That brings prices lower, ideally to below 25.30. That low, below that low, around 25.45. Technically, we should come below that low, complete wave 4, and then move towards the fifth wave rally towards 3200. And the second reason why we are still believing that wave 4 is unfolding as an expanded flat is because the Fibonacci ratio of 3 and 4 normally is around the 38.2%. That is the second reason. The third reason is the channeling technique. The Elliott channel is also passing around that mark, somewhere here. So these three reasons are strong enough for us to believe or that wave 4 could be just beginning to cut loose on the south side, and within the fourth wave, which is an ABC structure, I'm plotting that again. ABC at a minute degree. That is what we are proposing as a high potential trade setup. We are fairly convinced of one thing, though, that a potential top was in place last week around the 2942, which has been tested just about 2 points lower. That means we are at least printing one more low around the 2830, even if this unfolds as a flat. All right. Even if we are wrong in predicting that the prices are going towards 2500, at least 2800 could be seen on cards. Now, let me zoom into an hourly and let's find out what is the action here. We'll be coming up with a high potential trade setup right on the hourly chart. Let me do the counts quickly. Now, you've got to pay attention here because what the hourly chart is telling us is something very interesting. Now, we only follow the counts. The lower degree counts suggest we've got a five wave move on the hourly chart. And it is at a lower degree, so I'm going to change it to minute. When we have a five wave move, it means the move is incomplete. There needs to be at least one low below that particular extreme. All right. If we do take an extension of the first five wave lower, those extensions are pointing towards 2815 and possibly towards 2737, or in between, that is 2764 also. Now, there is a way it's going to go. It's not going to go in a straight line. It never does happen that prices are going to fall in one straight line. So what could be the next move or what could be the probable move in gold? We we might have gotten the first wave or just one more low is left. This could be the next move. Like it drops lower, it completes five waves and again a pullback, wave two of a lower degree, and then three, four, and five. This is what most likely to happen. Immediate short-term target can be tracked towards 28, 60, 65, the previous low. After that, a pullback back towards the 2900 handle, and then a reversal. All right, so the potential trade setup in gold is now coming up on your screen, sir. We would suggest, if you have not traded right now, only take partial shorts because the risk reward ratio will not suffice. We would say 2900, right now it's 97, somewhere around the 2900, 2905. It's even better if prices rally to 2910. The stop loss are remaining around 2910, 15 zone. Recommended stop does not change. We are going to stay away from the noise. 42 is the high. We are going to stay away from the noise. 29.55, the same which was recommended last session as well. And the short term and medium term targets are as follows: 28.60.65 as the short term target. Uh, Next is 28.16. So it could be somewhere around 2816, not exactly, but maybe 2810 or maybe 2820. Please give it a 10% room left and right. And then a pullback followed by 2750 and lower. Okay, 2750 is a good target for a medium term drop. Believe it or not, if gold has seriously reversed, I'm going to bring up the candlestick charts before we go to pound. If gold has seriously reversed from 2940 last Friday, then this guy is back in business on the south side. And we will observe the price action, but I want you to just have a look at what happened on Friday. Please look at the engulfing bearish candlestick pattern here. It is proof enough. Of course, if the wave 4 is unfolding as a flat, then it would settle somewhere around the 2850s, and it will give us a signal that okay, I'm not going further low. All right, we will try and catch it at that time. But if this engulfing bearish is seriously to be noted with the wave B of minute degree terminated, then bears are going to be back in business with 5 wave lower, dragging all the way back towards losing all the gains that has happened in the past few weeks. All right, that would not come as a surprise at all. So potential trade in gold, we are still remain the same. Sell on rallies through 29, 10, 15 zone. That's a good resistance intraday as well as intraday. Intraday. All right, let's pick up another beautiful story unfolding in the terms of pound. Once again, thank you for joining. For those who are with us on YouTube Live. If you do have any questions, please feel free to type in there, and I will take those questions right after the session is done. Okay, so gold lovers are happy that we have analyzed gold, and they would go back to business. Okay, here's the trade setup for. Here are the wave counts for pound. Actually, very interesting. Uh, the 5 wave rally was followed by an expanded flat corrective wave. Not even an expanded flat, it was a running flat actually. And we've been following meticulously since September 2024 all these instruments that we are analyzing right now. September 2024 onwards, that was a running flat into full display. Or a combination, it would be anything. But the most important thing is that it has found a support around the 38.2% Fibonacci ratio. All right. So if you run through the Fibonacci retracement, it is just around the 38.2% mark where prices have bounced. I mean, when prices were right above the 31, 3200 mark around the September 2024, it was only one wave theory which was predicting or a potential turnaround, and that was the wave theory. Otherwise, most of the bulls were trapped here. I've seen in the euro, I've seen in pound. It was difficult to get out. But now the story is reversed from 13th of Jan, and the short-term story is right up on your screens now. So we've got wave 1, wave 2, 3, 4, and 5. That's the first impulse. All right, and that would be minute degree. And this structure is slightly different, aggressive than what we just saw in the euro and the dollar index. The GBP USD bulls are quite aggressively into action, and they have not only carved waves 1 and 2 of minute degree, but they have also managed or minute, sorry. They have also managed to carve. I'm not doing the counts here, but I'll put a trend line very quickly, and then we are off to the potential trade setup. This is one of the strongest reasons why we see that bulls are aggressive here. That is wave 1, wave 2. Okay, then you can cut down another wave 1 of a lower degree to another wave 2 of a lower degree. Back to business. This is wave 3 of 3, or possibly another lower degree wave 1 and wave 2 into display. So what we are seeing here is a series, I repeat, sir, the series of waves ones and twos at minimum three levels. Wave 1, 2, wave 1, 2, and again 1 and potential 2. All right, but there is some upside business which is left for bulls to complete, and that business is towards 2800. We are just about 250 points away from that first target to be hit. I'm going to bring up the targets first and then we'll propose a potential trade setup in pound. All right, sir. 4 hour chart on your screens now again. And here are the targets 27, so 2800, which takes the previous resistance comfortably, and back towards 3200, very close to the previous high around 3400 mark. All right, that's the story in pound. Don't expect it to come in one shot, please. It's going to go step by step. Proposed wave theory is it goes and hits the first target there, brings back for a pullback. That is where we got to re-enter and take it further towards 3300 mark. We are actually in the trade. Okay, last Friday also we caught the train right around the 2350 zone. So the bulls have we're already in the trade, but we are midway right now. It's not recommended to go and completely buy a fresh order. We've got to do it in two or three bits and pieces. All right. So potential trade setup for pound is now flashing up on your screens. Potential long, partial. It's a small position that could be recommended around the current price. Remaining, ideally, it's going to go in bits and pieces towards that range, 1.2450. So it's going to be 1.240050. All right. Stop ideally would go to that price, 1.2250. We cannot place anything above that right now. We'll change the stop loss once the curve is finished and the take profits or the targets are 1.28. Near term is 1.2750, but it's not too far away. 1.3200 and possibly 1.3300 as well. All right, so the the dollar weakness and the major crosses strength is expected to remain persistent during the next several weeks to come by. And one more chart that I would like to quickly review is a Bitcoin because it's doing a beautiful pattern. It's carving a beautiful pattern, and there is an opportunity for us technical traders. We are actually looking for patterns. All right, there are not too many patterns, but we are actually looking for patterns. And once we see that, it's a beautiful story unfolding. So I'm not going to take more than a minute here. Bitcoin is carving a triangle pattern. All right. It's a beautiful triangle. You see that wave A, B, C, D, and E. Now, if it has been identified correctly, then we are going to see one more push after the distance that is being taken. The time traveled in this triangle is equal to distance up there. But believe it or not, the targets are 115,123. So if I straight away, if you allow me to bring up the potential trade setup in Bitcoin, potential longs are just around the corner, 96, 96, 300 right now. Stop goes, see, we can place the stop technically below wave C of the triangle. Wave C is 91,000. We can place it just below that. Personally, I would recommend possibly, if possible, place it. Your stop loss could possibly go below 89. The potential stop loss around 89K and the target price. We'll have to wait for a while because it's sideways. Prices are sideways right now. It might be that it might go a bit, couple of more ways. But if wave E is complete here around the current price action, then we are going to see. Please draw these two lines on your charts. A pop through that line around 101 would confirm we are, Bitcoin is headed north with a target of 115K and 123K. All right. So that is those are the five high potential trade setups we had set up. We were set for this session when we started. If you do have any questions, please either in the Zoom session or anyone from the YouTube live, you can please type in and we can handle. One, there are two more chart setups, but they are not high potential. We are waiting for a top to form. But the story in VIX is in it's the volatility index which we have been watching. This story is beautifully carving potential wave one and wave two as a triangle. We are looking for a wave three push higher through the 23s and 1900 levels, at least above that mark, 28. Now, when the VIX is rallying, the stock markets are just moving opposite. Mark my words, what happened in the August first week, what happened previous year, what happened in 2020, it's all absolutely wonderful against the VIX. So Dow Jones and SPX 500 we'll be watching very closely and we'll be bringing up again in the next session whenever the possible trade setups are getting uh, converted into high potential trade setups. We will bring up those as well. All right, now as promised, just please hold on 1 second. Uh, I've got to. So if there are no more questions, we will bring the current session to a pause now. And I'm also passing the past video links for I can at least see a couple of friends joining. So welcome again and thank you for taking the time to be here present. Yeah, Mr. Rommel is here and my friend and these are the list for all the webinars that we are conducting. We are conducting 4 webinars every single week. Two, yes, yes, sir. Thank you for being here, brother. Two in English, there is live session and educational, and two in Hindi. Please feel free to register for all the sessions that you may be interested in. They are all theory and practical. And yeah, we have BH joining for the first time, I see. And we have Cho Rin as well. So thank you for tuning in. Thank you for taking time. Irazo is always here almost. Muhammad is always here. Romal for the first time. We would love to see you again, sir. Yeah, if you do have any questions anytime, please feel to write to me at harsh.jappi@gtcfx.com. It is now on your screens. We'll be more than happy to get back to you in less than 24 hours. That's what I'm here for. So any questions regarding educational, regarding videos, regarding technical analysis, regarding your chart practices, regarding anything whatsoever that you may have regarding Elliott waves, just write an email to me and I'll be more than happy to get back. All right, so once again, thank you everyone for taking the time to join. We'll bring it a pause here. Thank you everyone joining from YouTube as well. We've got YouTube live sessions going as well. So thank you everyone joining there. And we will be back tomorrow with the education in English. and that's the trading zone. Thank you, Mohammed G. Thank you, Roman. Thank you, everyone. Thank you for your presence. Thank you, Brother Irazo. Thank you, Mr. Chocho. Thank you, everyone. Goodbye.